Let's check out the banking sector right now. Joining us, Jason Goldberg, Barclay Senior Equity Analyst. Jason, great to have you with us. Where are we in the, like the broader markets, banks took a tumble because they had outperformed in the rally post-presidential election. They took it really hard when we sort of course adjusted here. So where are we right now in terms of valuations? Yeah, no, valuations are 2 multiple points below historical averages.
But when looking out, if you kind of think
on a price to book,
on a price, price to earnings,
okay.
Price to book, you're about a half a point below where we've been historically.
Okay. So how do you see the environment? Has the environment changed from when banks had a huge run up and peaked during this most recent rally? Have the fundamentals changed?
Not really. If you think about the reasons for the run up, it was really twofold. First, I think the market getting excited for a pro-growth agenda coming from the administration, and then secondly, less regulation, helping the overall industry. If you think where we stand today, I think most both believe that will still come to fruition. Now, in the near term, there's some uncertainties. I think the market's trying to figure out whether it's taxes, immigration, tariffs, and the like. But I think there's an understanding of the next few months that will get sorted out, and that will bring corporates back to borrowing, investing, and lead to increase in M&A and IPO activity.
On the M&A activity, there was a belief that there would be an FTC that would allow more mergers, more deals to happen. Have you rethunk that part of the equation?
No, listen, we still think you'll see consolidation really across all industries. I think it's taking a bit longer to get, certain people in places to allow that to happen. And I think corporates are a little bit sidelined at the moment because they want to know what ultimately the outcome from some of these tariff and immigration policies. But once that's figured out, we do think you'll see kind of a reacceleration of this M&A process.
What's up with Bank of America? And I asked that because it was one of the first banks to move back to pre-election levels, and it seemed to be a laggard.
Yeah, it has. I think part of it was, there has been, filings that Berkshire Hathaway was reducing a fairly large stake. So that has weighed on the stock. And then secondly, I think just Bank of America, right? There's some questions and uncertainties that are impacting America at the moment. And they get impacted by that. But, looking out, we do think they're well positioned to capitalize on growing net interest income, rising fee income, controlled expenses. And given where valuations are, next couple of weeks, hard to predict. But over the course of the year, we do think those shares can outperform.
You've got an overweight, though, on all of your money center banks under your coverage. Which is your favorite?
Yeah, at the moment, I think, we kind of talked about Bank of America, should do well. JP Morgan's kind of, typically the best athlete in the bunch.
And your least favorite is none. That's
listen. Generally,
we lean from overweight everything.
If you think about kind of the backdrop we talked about of an environment where loan growth could pick up, M&A and IPO activity could accelerate as the year goes on, an environment where we should see the group benefit from a reduction in regulation. And the biggest banks really took it on the chin for the last 15 years, getting progressively more stringent. And now particularly with Mickey Bowman being named Fed Chair via supervision. A much more pragmatic approach to bank regulation, that group should benefit.